The simplest way I can put it is this is the biggest deflationary nuclear bomb we've ever been given. And people don't understand it yet. They're still arguing about, secular inflation in the 70s again. I'm like, are you fucking kidding me? You don't understand what's about to happen.
I just think in terms of total dollars and value, and, gold is a $15, $20 trillion asset. We know all the other values. Bitcoin could easily be a $10 trillion dollar asset. And I think today it's, 1.5, 2. So easily could get to 300 to 500,000.
I think the opportunity here is the space is 2.5 trillion today. I think it's going to 100 trillion in line with other asset classes. So that's the biggest macro trade of all time and the largest generation of wealth in all human history. That's the trade. How you want to slice and dice that? Yeah, how you want to slice and dice that's up to you. What risk tolerance you have, but that's the trade.
Raoul begins by discussing the concept of financial repression and its recurring nature within a 4-year cycle. This cycle aligns with the election cycle, the crypto cycle, and other significant economic events. He emphasizes that this cycle is a driving force behind asset prices and overall market behavior. Currently, we are entering a phase where governments and central banks need to refinance a staggering $10 trillion in debt. This refinancing process is typically accompanied by liquidity injections into the economy, as there isn't enough GDP growth to cover these debts. Pal highlights that during these cycles, all assets become highly correlated, but one asset class consistently outperforms the others, cryptocurrencies. This outperformance is due to the secular adoption curve of digital assets, combined with a macro tailwind of currency debasement and the cyclical nature of the economy. As we approach an election year, governments are likely to increase spending and liquidity, further boosting asset prices, particularly in the crypto space. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So there's financial repression going on, but it goes in this 4-year cycle. The 4-year cycle happens to be the crypto cycle, the US election cycle. It's all the same thing. So it doesn't matter what you label it, but there is a cycle that's going on, and we're just coming into it now, which is we've now got $10 trillion of debt to refi. You have to refi the interest payments. Usually what they do is they inject enough liquidity into the system to pay for this because there's not enough GDP growth to pay for it all. And so we go on to the next cycle. So that's really what drives all assets right now. Everything is basically correlated. But out of that, there's one asset that does a lot better because it's got the secular adoption curve, which is crypto, plus the macro tailwind of debasement of currency and the cycle. So that's where we are in the cycle now. Zoning into election year. Well, this is when they start giving out money. They also have a lot of refi to do. So it tends to be a very good back end of the election year. And then the following year tends to be very, very strong too. But this is a global thing as well. Every major central bank is refining their debts in the same cycle. The Europeans, the Japanese, the Canadians, the Brits, and the Chinese. Now, what you always look for in these refi cycles is who's the weakest link, because they're likely the ones to do the most stimulus. It's probably China this time around. Just came on the tapes just now. I think Felix actually just tweeted it out. There was a Bloomberg story that I've been talking about for a while, is the US and China have agreed to kind of help each other. The simplest way I can put it is this is the biggest deflationary nuclear bomb we've ever been given. And people don't understand it yet. They're still arguing about, secular inflation in the 70s again. I'm like, are you fucking kidding me? You don't understand what's about to happen. The whole space goes up a lot. I think
over 100.
Solana does maybe 10x from here, and Bitcoin does 5x or 4x from here. That kind of stuff. Typical bull market. And then there'll be the main thing that I'm starting to think through is there is always another layer one race, which is early stage when you don't have proven network effects. that bet is actually a good bet. It's not one you'd go all in on, but that bet was the Solana bet of last cycle, the ETH bet of the previous cycle. So I'm starting to think through that because, I mean, I don't trade, don't do anything. I just sit with my portfolio. So I'm thinking through that because I reckon there's a really good trade to come. And it's a lot of fun, but it comes very quickly and it usually gets overvalued and then goes down 95% afterwards. But you get absorbed by this cycle mentality. Now, by all means, de-risk a bit, take some lifestyle chips off the table, do something, but this trade is much bigger than a cycle. And you think you're going to sell at the high and buy at the low. You've got another thing coming. You won't. And you'll miss it.
But I just think in terms of total dollars and value, and, gold is a $15, $20 trillion asset. We know all the other values. Bitcoin could easily be a $10 trillion dollar asset. And I think today it's, 1.5, 2. So easily could get to 300,000 to 500,000, which is sort of where I thought, like, rationally it made sense. Could it do much more than that? Absolutely. But I like to have a roadmap and I like to know where I'm going. And in my experience, when I've ignored a target, it's been a bad idea, generally speaking. I mean, yes, Raoul bought Bitcoin at 200. Okay, he sold it at 2,000 and then it went to 18,000 and he probably wanted to kill himself. But he got a shot to come back at 3, 4, 5, 6, 7,000, and he got a shot to come back in. But I don't worry about what I miss, right? I'm never worried about, what I'm missing. That's just not a proper way.
How I actually think about this is I think the opportunity here is the space is 2.5 trillion today. I think it's going to 100 trillion in line with other asset classes. So that's the biggest macro trade of all time and the largest generation of wealth in all human history. That's the trade. How you want to slice and dice that? Yeah, how you want to slice and dice that's up to you. What risk tolerance you have, but that's the trade. When I first did the first piece of work on Bitcoin back in 2013, I said it was worth $1 million.
Yeah.
And I don't think that's wildly wrong. If Bitcoin's at $1 million, the space is somewhere close to my target of 100 trillion, or maybe it's 50 trillion. It doesn't matter. It's just gigantic. What would be the right allocation for this point in the cycle? Well, as Dan said, it's a reasonable chunk of crypto. Most family offices I see start at like 1% and end up at 20% over a cycle. So I think somewhere 10% plus works well. You want to be heavily technology because technology is in a secular bull market. You can probably own bonds finally for a bit, make a bit of money there.
But whatever I would do in bonds, so I'm still a big proponent of gold and I'm still very involved there. And I think, you get this move, let's say in the 10-year to 3, and you get the move in the short end to 2 something, gold will be up at, 3,000. So I use gold as a proxy.
Makes sense.
For whatever you want your cash or fixed income allocation to be. But you can see that's less. And then I think you have to have a big chunk of NASDAQ.
It's so straightforward to do. You can get your technology investment. The NASDAQ has been producing 17% returns annually since 2011. I mean, that's huge. While the S&P does 8%. So, I mean, Bitcoin's at 147%. So it's a whole different game. But yeah, I mean, I would just be growth orientated, all in on risk. That's what it should be. What Dan has raised the point is fascinating because these big family offices are the complete opposite. They are super risk adverse. And you're like, and this is the reflexive thing that Dan talks about as well, is these guys are all going to end the cycle over their ski tips long again.
Oh, yeah.
That's how it always works, right? They're just not there yet.
In addition to traditional assets like stocks and bonds, Powell highlights the importance of investing in technology and venture assets. He sees a significant shift occurring as companies in the crypto space begin to go public and tokenize their equity. This transition from early-stage ventures to more established core assets presents a unique opportunity for investors. Pal mentions Solana as an example of a transition asset that is moving from a speculative venture to a more established position within the crypto ecosystem. He also notes that the lack of secondary liquidity in crypto markets creates opportunities for savvy investors, particularly hedge funds, to capitalize on dislocations and undervalued tokens.
You have to have at least 10% in blockchain, crypto, Web3, digital assets. And I always say you have a breakdown, you have some Bitcoin and Ethereum, which are the core assets of the space. And then I think you can have a venture fund, and then you could have a growth fund, which is what we are, or a little later stage, not as speculative, but I think is really going to come into its own now as companies that we have start to go public and potentially start to tokenize their equity. All sorts of good things are going to happen on that front. But I think how you decide to break it up, maybe you do a little Solana because Solana is a transition asset. I think it's transitioning away from a venture project to becoming a core asset. Not quite there yet. And I don't know, Raoul, maybe you want to make a pitch for SWE as a venture asset that's potentially moving into, not quite.
Crypto fund of hedge funds, so called Exponential Age Asset Management, XPAM. And the other part of this cycle is there's no secondary liquidity in crypto markets. It's bizarre. So what you get is all these early stage people, they dump the tokens, and then there's a few Asian trading shops, a few market makers, and a bunch of retail. But there's literally $10 billion of professional capital in crypto markets. And Dan and I grew up in the hedge fund industry, and that's a hedge fund's dream. There's not enough capital in the space, means lots of opportunities. There's all these dislocations from new tokens coming out, going down 80% because people get liquidity. And these hedge funds can sort out through all the shit and say, hey, this is actually a good opportunity, stuff like that. And really that whole thing is getting us from the idea of this is to get us from the 2.5 trillion to the 100 trillion, give it to the 12 of the best, 14 of the best hedge funds in the world, let them do the allocation. Liquidity in the US is Fed net liquidity, which is the Treasury General Account, which is the Treasury, which is the reverse repo, which is somewhere in between the Treasury and the Fed, and there's quantitative and the use of the balance sheet. So they're all three joined at the hip, and they manage that liquidity flow to manage this process. And Dan's right, because they know is once they start unleashing the spigots, then the reflexive buildup happens. And guess what? It generates capital gains. They get capital gains tax. It starts financing deficits. It's kind of, this cycle is the clearest I've ever seen macro in my life because it's so cyclical. Now, does that last forever? Probably not. But right now, it seems the most clear I've ever seen it. You don't have to worry about the shit that Dan and I used to worry about.
Raoul Pal's insights provide a comprehensive view of the current macroeconomic environment and its implications for investors. As we navigate the ongoing financial repression and the global debt refinancing cycle, it's clear that cryptocurrencies and technology assets will play a central role in the next phase of market growth. Pal's advice to focus on long-term value, maintain a growth-oriented portfolio, and take advantage of the cyclical nature of the markets is both timely and actionable. For investors looking to capitalize on these trends, the key takeaway is to stay informed, remain adaptable, and be willing to take calculated risks. As Pal aptly puts it, this is the largest generation of wealth in human history, and those who position themselves correctly stand to benefit immensely. Please like and subscribe my channel.